Have you learned enough about taxes and NFTs? Probably not. That is why we have part 2 of our conversation with Brad right now.
You're on Twitter, obviously, and that's how we found you. I only exist on Twitter to just keep up with NFT stuff. But the amount of activity and people saying, I sold this for this, or I just bought one of these, or check out this mint, or check out this drop. I could see how, because it's, I don't want to say it's a wild, wild west, but because there's some things that are not yet in place, how people who are really, really enjoying this new mania could probably find themselves in a lot of trouble because they're looking at it as gains in their head, not the financial term, but there's things that are going to come on the backside of this. And there's not a W-2 that's going to arrive in your mailbox and be like, here's my document from the NFT world and I'm supposed to give this to you. Like, that's not going to happen. This is not like having a pair of Michael Air Jordans, the first ones, and selling those 20 years later and having one big sale. This is sale after sale after sale and people flipping and flipping and flipping. What is your thoughts on the risk there?
Yeah, my thought is that scares the heck out of me just from my own like conservative financial basis. Like, not that I think anybody's going to get thrown in prison or anything like that. You know, I'm not talking about that kind of stuff. It just, I mean, more from like a record keeping perspective, like that's the way my mind goes, is like, how are you going to do this? You know, I think to your point, the onus, it's on the taxpayer to do the best they can in good faith. Now, naturally, somebody who is making millions of dollars flipping NFTs and is not reporting their income, they deserve every bad thing that's coming to them, right? Like, I would not suggest that for anybody at all. You know, this is going to be very, very hard for a lot of us to put together, but you report the absolute best you can. I think the obvious answer is there is going to be a technological solution for this. There has to be, right? Like, almost by definition, I know there are companies in the background working on this, and there will be something that they'll just get a report. You know, that said, most people, I think the substance of your question is, do people even know that they have to do this? Or are they going to just say, oh, it's crypto? The world doesn't work that way, my friend.
That whole Schitt's Creek thing where he's like, it's a write-off.
Yeah, right. As if that absolves you. Yeah.
What should we be looking for as far as somebody doing our taxes? Like Brian and I have been talking, we're like, is there like an NFT certification? Like somebody that we need to be looking for specifically who knows how to handle this?
Yeah. I mean, I cannot imagine there are a ton of NFT expert CPAs out there right now. But that said, there are plenty of CPAs who understand, hey, what does it mean to sell a stock or a mutual fund? Like, I don't think we need to think of it terribly different than that. The issue becomes ETH to US dollars. That's where we're going to have a problem. That's going to be the most vexing thing for accountants out there. If this was all in USD, this is simple. It's really very simple. It's nothing revolutionary. It's just, hey, just like you get that report from Vanguard that says, hey, I had these stocks, I bought and sold them. You would provide something similar to your accountant. They would know exactly what to do with it and it would be fine. You know, I've went into Etherscan to look at my transaction detail and like, it's there. You just have to kind of fish it out. It's a lot easier to do it in ETH, right? But again, we all know, right? Like the prices change pretty significantly. So that might not give you an accurate answer. But as long as you guys are not trying to like cheat the government, like stupidly and not report anything. Like if you're doing this in good faith, you report to the best of your ability, we're all going to be fine.
You're making me feel better.
Yeah.
I'm nervous.
There's nothing to worry about, Heather. I promise.
Okay.
Like you do the best of your ability. You pay the taxes you owe. And if they come in, again, in the 1 in 1,000 or 1 in 100, whatever it is, case that you get audited, they adjust you a little bit.
Okay.
Right? There's nothing to be worried about.
I have one elementary question. This is it, and I'm good after this. And you may have said it, but I'm just a little confused. So if I keep my NFT and don't sell it or cash on it, that's something I don't have to necessarily claim right now because it's unrealized. What about keeping ETH in my wallet? Is that something that I get taxed on, or can I keep ETH?
Good question.
You can keep ETH as well. That's
and it's
a great
not taxable.
Question. No, it's not. So that is absolutely 100%
You're making my day,
correct.
Brad.
Like, yeah.
All right.
So right, if you bought ETH and you just held it, there's not a taxable event. It's unrealized. So you're good to go. Now, again, I gave a little bit of detail on this, and this is where like it gets a little confusing, is with, you know, that quote unquote sale. And I keep saying quote unquote because I think it's ridiculous, but like the sale of ETH to buy an NFT, like there's a taxable event there. And then there's the taxable event when you eventually sell that NFT. And then you've got ETH again. And then you're holding that. So I know it sounds like a lot. It like once you sit and think about it, it's not that confusing.
It makes sense.
There's logic to it.
If you are a business owner, one of the things a lot of people don't tell you is estimated tax payments and trying to get ahead on those. And I learned that the hard way. And this year has been totally different. I feel like weight lifted off my shoulders because I'm ahead. But if you are transacting at a pretty regular cadence in terms of NFTs, what are estimated tax payments and how do you go about kind of figuring those out?
Yeah, that is a really good question. So, okay, this kind of goes back to elementary tax return. Okay. So you have all your income and such, your capital gains, right? What we've been talking about this whole time that goes onto your tax return. So you have all your income, you get a bunch of deductions and, depending on, you get your standard deduction, you might get some credits if you have kids, et cetera, et cetera. That then gets you down to your taxable income. And then you have a tax liability. Okay. There's some magic in the background, a little multiplication, right? Based on your tax rate, and you get your tax liability. That's the tax that you owe. Now, most of us have W-2 income. So we have a regular paycheck, and every 2 weeks or however often you're paid, you get your paycheck, but they've already withheld some federal tax payments and state as well. But it's just easier to talk federal here. So that happens in the background for you. In essence, you're paying the federal government throughout the year some money to put aside. That money is not tax. You have not paid that. That's not tax liability. It's kind of like the government's kind of holding that money for you as an offset against that future when you put in your return, you figure out what your actual liability is. So let's say you owe $10,000. That's your federal tax liability for 2020, right? The returns we just filed. And if throughout the year you had withheld, now in many cases is unbeknownst to you, but your HR department is doing this. If you had withheld $12,000, then your liability is 10, they withheld 12, so you have an overpayment of $2,000. And that's where our refunds come from, right? Mm-hmm. Like it's not magic. It's just that's the fundamental essence of what happens with a refund. They over withheld for you. Like my CPA's brain would say, like the perfect tax return is a zero refund and a zero due because I withheld the exact amount, right? Like it's picture perfect. I get no refund. The government wasn't holding extra money for me throughout the year. I was able to invest that or use it however I wanted. Perfect, right? Okay. Contrast that, Rich, with your question, which is for entrepreneurs, for small business owners, for people who have excess income or gains in this case. You have to pay that money in throughout the year. And again, the onus is actually on you to do this. There's nobody looking out for you. There's no nanny state. There's no company that's doing it for you, right? Like you have to do it. If you're a small business owner, let's just use that because it's easy. You make $100,000 in 2021. You can't just pay your federal liability on April 14th, 2022 and you walk away and everybody's happy, right? Like because you were supposed to make payments on that account in theoretically equal amounts throughout 2021. You make estimated tax payments. So in a perfect world, you have a sense of what you owe, you have a sense of what your income is, a sense of what you owe, and you just kind of pay quarterly. There's a website called EFTPS.gov, and that's the automated electronic federal tax payment system. So you link up your bank account. It takes about 30 seconds to send a payment in. So it's actually pretty easy, but obviously the calculating is a little hard. What I really want to do with these estimated payments is avoid interest and penalty.
Yep.
Okay. So that's why you make your estimated payments. And now this is kind of outside the scope of this podcast, but I would definitely have everybody look up like estimated tax underpayment penalty. Depending on your income level, it's between 90 and 110% of your prior year tax liability. So again, I said $10,000. We're using that as hypothetical. So that was your 2020 federal liability. So for 2021, pretty much as long as you have that 10 grand paid in quarterly payments in 2021, you're fine as far as penalty and interest goes.
This is exactly what happened. My first year, I owed a ton and I literally played the fool as in like, no one told me, and then the following year, when I did my returns, I had all the estimated payments kind of drawn out by my CPA. And it was just like, okay, but I think what you're saying is really simple. No one is taking what you owe out for you, like in a traditional workplace. Number one, you want to make these payments in advance. And you probably would do that quarterly. Let's just say you owed and paid $10,000 in taxes in 2021 and somehow your income changes dramatically. Even if you assume it's going to be the same or in that little range, you're still good, even if you end up owing more because you made so much more. Like that's how I think about it.
Right. And you will obviously owe more tax then.
Yes.
But you won't get hit with the interest and penalties for the estimates.
Yes.
Okay. And then in the following year, your tax liability from the prior year would have been huge then. So then your estimates will have to go up,
exactly.
right? So it's always always that trailing year. So that's the important point, right? And now naturally, like your income might go down and then you make adjustments accordingly. Highly suggest speak to an accountant or just do a little Google research. But this again goes back to my entire tweet thread and this podcast is you have to do your own research, but it's important to have a mental framework, at least how to approach this. And I hope that this helped at least with that is like we all have a sense of, okay, why does the tax system work like this? What do I have to look for? You know, all of these little details, they can change at the margin. They're not going to change that much, but at least we have a framework to move forward intelligently.
You're a great teacher.
Yeah.
First and foremost, thank you so much for this. I feel a lot more confident, but I know there's a lot more to learn too. Do you have any suggestions about where listeners can go? Your show isn't about this per se, but
yeah, it's not, but it's interesting. Actually, our most recent podcast episode 346 of Choose FI, we talked about how do I figure out the taxes on this, and it's you know an hour version of what we just went through, and you know again it gives people just an understanding of hey, what do I need to think about? So yeah, I'm going to try to keep up to date on Twitter with any new developments. So I think I'm at Brad Choose FI, so definitely follow me there. But otherwise, you know, I'll do my best to keep this info up to date.
I now feel a little bit more like a responsible adult, you know, knowing what I have to do and knowing a couple of things like, okay, like hold on to it for more than 12 months, number one. And, you know, like the less transactions, the better in my opinion. So I'm just going to kind of leave it there.